Now, the financial advisors often say there is a difference between, excuse me, between investing in the market and placing bets. The US Senator Elizabeth Warren says regulators need to step in and do so now.
What's happening with GameStop is just a reminder of what's been going on Wall Street now for years and years and years. It's a rigged game. They've turned this stock market not into a place where you get capital formation to support businesses, but more into a casino. It's time for the SEC to get off their duffs and do their jobs.
Faites vos jeux, mesdames et messieurs. Place your bets. The investments promoted on Reddit do have the feeling often of a roulette table. Now, first of all, spin the dice and it lands on GameStop, a big target of the short sellers. Round it goes, and this time they're buying up shares of the movie theatre chain AMC. From there, it's gone in strange directions, including Dogecoin, a tiny cryptocurrency that began as a joke. Now it's silver, the commodity and the related securities. Where next? Red, black, numbers, lines or streets? Rana is with us. Rana, who I'm sure will cast a supervisory glance over the. Look, Rana, what do you make of it? Are we merely seeing something that's happened in different guises in the past? Same game, different rules.
I'm going to say yes and no. I would agree with Elizabeth Warren, who I feel may be reading from my first book, actually, which was on this topic, about the market itself having become a casino over the last 40 years or so. I mean, I think that we've lost a certain amount of price discovery, particularly in the last decade with the Fed money dump, the central bankers that have been papering over various problems in the real economy. But really, since the 1980s onward, I would argue that markets have become much more driven by financial things, stock buybacks, leverage, than they have about underlying issues and opportunities and challenges within an individual company. That said, I do think that what happened with GameStop and in particular Robinhood as a platform, and we know this platform has had problems. They've already run into trouble with the SEC before this. They're operating like a typical high-tech Silicon Valley startup, move fast and break things. So some of that is specific to this company.
All right, Rana.
Yeah.
What's wrong with it? What's wrong with it? I've read a lot. I've seen, I've heard the millennials on my team saying, good, it's always been corrupt. We're getting on with it. And then there's old fogies like me who say, well, we've seen this before. I remember 1987, et cetera, program trading. So what is fundamentally wrong with, if there is anything at all, with what the retail investors are doing? Take, for example, today with silver.
Honestly, Richard, you can argue it both ways. And I've had conversations with regulators who will say, in some ways, these platforms are just the latest iteration of what began with index funds and then continued with a retail broker like a Charles Schwab. And now we have apps. And so, hey, this is about the little guy getting in the game. You can argue that as long as the little guy is playing by the same rules, not breaking existing rules. But you're getting at a deeper question. I have sympathy for those millennials. I think we have an asset bubble in markets. I think that we have an economy that's way too dependent on asset prices. That's one of the reasons why I'm a big fan of some of the changes that Biden is trying to make with the work, not wealth, starting to move to more of an income-based economy rather than one that's based so much on asset bubbles. It's going to burst. It's going to end badly. And Richard, I will be back here on the show talking about it when it does. Oh, yeah.
And I can hear the words coming out of your mouth. I told you so. Look, Rana.
Well, I'm going to give you another look over my glasses.
Yes, oh dear, yes. I think that the thing that's really got me about all of this, though, is the damage it does, in my view, to the perception. Look, a few times a year I look at my pension fund and I do my best to rebalance it so I'm not sort of having to buy the cheapest can of soup when I retire. In terms of, but I'm doing it on the basis of fundamentals. What do we expect growth? Where do we expect recovery? what's happening now is got nothing to do with that.
That's absolutely right. But you have to also ask yourself what has enabled that. It's a variety of things. It's technological innovation, but it's also the fact that we have central bankers propping up markets, making it seem, certainly to some of the 13-year-olds that are trading, they've never seen a down market. There are a lot of people out there that don't know that we can have massive corrections, but we can.
All right, finally, it's a snowy day in New York, but a chance for us to do a bit of work. Rana, explain to our viewers who who don't really understand why the Fed, with QE, pumping money into the economy, which is necessary for growth, to prevent collapse, systemic collapse. Why the Fed pumping money in pushes asset prices higher?
Well, essentially what the Fed does is by pumping money in, it elevates the asset prices of safety things, treasury bonds, blue chip stocks. The idea is to push people into the markets, get money being spent, keep interest rates low, which of course allows people to, pay their mortgages, make their car payments. It essentially keeps money flowing around the system, but it also papers over a lot of problems. So yes, Richard, on the one hand, it's great. We needed that, certainly post 2008. But in the long term, there's always a price to pay. The piper will be paid. And I think you're starting to see some of those cracks already with this story.
Good to see you. Hope you're keeping well in the snow.
I am. And in my gold stocks.
Where's next? Go on, where's next for the millennials? Actually, I better be careful because I'm not being dismissive. But where is next for the retail investors?
Oh, great question. Well, commodities options. I mean, we saw just a few months ago, we had a big blow up with individual investors getting involved in options to buy commodities. I mean, silver today, more and more esoteric things being traded on Robinhood. When my 13-year-old says, Mom, you got to buy the dip, I know it's time to get out. No.
Your 13-year-old was saying, Mum, you've got to go and buy dips.
Maybe that was it.
Okay, we're gonna maybe later in the year we'll give the 13-year-old a portfolio and see if they can beat the street. Thank you. Good to see you, Rana.